Based on the historical data and forecast, Bitcoin shows an overall upward trend, consistently testing and bouncing off the support price of $90,500. The RSI fluctuates between 45.0 and 65.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility. Given this, I recommend a long position strategy. We will enter a long position when the RSI falls below 20, indicating an oversold condition. Considering the recent data, the RSI has not reached this level, but we should be prepared to act when it does. For now, let's use a conservative approach. If the price dips to $90,500, which is the support level, we will enter a long position at $90,500. The stop loss will be set just below the support at $89,900 to protect against unexpected downside moves. The initial target price will be the recent resistance level of $92,600. To further refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it suggests a potential buying opportunity. However, we will prioritize the RSI signal. If the RSI falls below 20 and the price is near the lower Bollinger Band, it strengthens our long position. If the price reaches $92,600, which is the resistance level, we will take partial profits. We will then move our stop loss to break even to protect our gains. We will continue to hold the remaining position, targeting $93,500, anticipating a potential breakout above the resistance. This combined RSI and Bollinger Band strategy aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and profit-taking. Based on the historical data and forecast, Ethereum shows a slightly upward trend, with price fluctuations within the support and resistance levels of $3,080 and $3,160. The RSI indicator fluctuates around 50, indicating neither strong overbought nor oversold conditions. However, the recent forecast suggests a potential pullback to $3,080, followed by a possible rebound. Considering this, I recommend a long position strategy. Enter a long position at $3,080. Set a stop-loss order at $3,070 to limit potential losses if the price continues to decline. A reasonable target price would be $3,130, based on the forecast and the recent resistance level. To refine the strategy, incorporate the Bollinger Bands. When the price approaches the lower band, it signals a potential buying opportunity. Since the forecast indicates a price near $3,080, aligning with the lower Bollinger Band, this is a favorable entry point. The strategy involves entering a long position at $3,080, placing a stop-loss at $3,070, and setting a target price at $3,130. This approach combines technical indicators and trend analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB exhibits an overall upward trend, consistently testing the 897 support level and fluctuating around the 900 to 910 resistance range. The RSI consistently stays above 50, indicating a bullish momentum. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a pullback or consolidation. My recommended strategy is to implement a long position when the RSI dips below 50, specifically when it reaches 48.8 on December 30, 2025. The entry price should be $861. To manage risk, set a stop-loss order at the support level of $897. The initial target price should be the recent resistance of $907, aiming for a 15% gain. To capitalize on the forecast data, I suggest a second long position on January 13, 2026, with an entry price of $910. Considering the RSI is likely to remain above 50 during the forecast period, and the price is near the upper Bollinger Band, a conservative strategy is to set a stop-loss at $904 and a target price at $915. This provides a smaller but more secure profit margin of 4%. Combining both strategies, the portfolio should be allocated 60% to the first position and 40% to the second position, prioritizing the initial long position due to its higher potential gain. This blended approach leverages both historical trends and short-term forecasts for a balanced and potentially high-return investment. Based on the historical data and forecast, XRP shows a generally upward trend with increased volatility. The RSI consistently remains above 50, indicating bullish momentum, though it has approached oversold levels recently. The Bollinger Bands have been widening, suggesting increasing price fluctuations. Combining these factors, I propose a portfolio strategy focusing on capitalizing on short-term pullbacks within the prevailing uptrend. We will implement a strategy that combines RSI and Bollinger Bands. Specifically, we will enter a long position when the RSI dips below 50 and the price touches the lower Bollinger Band. For example, on January 13, 2026, the forecast price is $2.14 and the RSI is 51.2. We will wait for the RSI to drop below 50 and the price to touch the lower Bollinger Band. If the RSI falls to 40 and the price reaches $2.07, we will enter a long position at $2.07. Place a stop-loss order at $2.03, just below the lower Bollinger Band to limit potential losses. Set a target price at $2.17, near the upper Bollinger Band, to capture a reasonable profit. This strategy allows us to benefit from the upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Solana exhibits an overall upward trend. The price has consistently tested and bounced off the support level of $132, while the resistance has fluctuated around $139. The RSI indicator has generally remained within a range, indicating neither strong overbought nor oversold conditions. However, the recent RSI values are approaching 60, suggesting a potential for a short-term pullback. The Bollinger Bands show that the price has been trending within the bands, with occasional touches of the upper band, indicating periods of increased volatility. Given this analysis, I propose a strategy that combines elements of trend following and mean reversion. I recommend entering a long position at $138 with a stop-loss order placed at $135. This entry price is near the recent resistance level, and a break below $135 would signal a trend reversal. The initial target price should be $140, aligning with the forecast and the upper Bollinger Band. If the price reaches $140, consider moving the stop-loss to break even to protect profits. A secondary target price can be set at $142, based on the historical upper Bollinger Band levels. This strategy aims to capitalize on the prevailing upward trend while incorporating risk management through stop-loss orders and profit-taking targets. This portfolio is the most efficient of the three strategies because it combines the trend and mean reversion strategies. Based on the historical data and forecast, TRON shows a generally upward trend with price fluctuations. The RSI consistently stays above 50, indicating bullish momentum, but occasionally reaches overbought territory above 70. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.301. The stop-loss will be set at $0.296, just below the support level, to limit potential losses. The initial target price will be $0.307, aligning with the forecast high. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position at $0.276, with a stop-loss at $0.273 and a target price of $0.298. Conversely, if the price touches the lower Bollinger Band, it could signal a buying opportunity. If the price reaches the upper Bollinger Band and the RSI is above 75, it suggests a potential short-term overbought condition, prompting us to take profits at $0.304. Combining these signals, the most efficient portfolio will be a long position at $0.301 with a stop-loss at $0.296 and a target price of $0.307. Based on the historical data and forecast, Dogecoin shows a fluctuating trend with a slight upward bias. The RSI consistently remains below 80, indicating that the asset is not currently in an overbought condition. However, the RSI has been trending upward from 37.1 to 48.6, suggesting increasing buying momentum. The Bollinger Bands show that the price has been oscillating within the bands, and the recent movement suggests the price is approaching the upper band. Considering the forecast data, which predicts prices around $0.14, and the upward trend, a long position is warranted. Therefore, I recommend a long position with an entry price of $0.137. The stop loss should be placed slightly below the support level at $0.132, setting it at $0.131 to provide a buffer against potential short-term dips. The initial target price should be set at $0.144, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches $0.144, we can reassess the situation and consider a trailing stop loss to protect profits. This strategy combines RSI and Bollinger Bands to identify a favorable entry point with risk management measures in place. Based on the historical data and forecast, Cardano shows a mixed trend, with recent price fluctuations around the $0.39 mark. The RSI indicates that the asset is currently in a neutral to slightly oversold territory, hovering around 50. The Bollinger Bands suggest that the price has been oscillating within a relatively narrow range, with the lower band around $0.32 and the upper band around $0.43. Considering these factors, I recommend a cautious long position with a focus on risk management. Entry price should be $0.386, with a stop loss set at $0.37, just below the support level. The initial target price should be $0.402, aligning with the recent resistance level. To refine this strategy, we can incorporate RSI signals. If the RSI falls below 20, indicating a strong oversold condition, we can consider entering a long position at $0.386, with a stop loss at $0.37 and a target price of $0.391. Conversely, if the RSI rises above 80, signaling an overbought condition, we can consider exiting the current position or initiating a short position. The forecast data for the next week suggests a slight downward pressure, with prices fluctuating around $0.39. Therefore, a conservative approach with tight stop-loss orders is advisable to protect capital and capitalize on short-term price movements. Based on the historical data and forecast, Bitcoin Cash shows a fluctuating trend with a recent pullback. The RSI consistently stays above 50, indicating a bullish momentum, but dips below 50 on January 12, 2026, suggesting a potential short-term oversold condition. The Bollinger Bands have been widening, indicating increased volatility. Considering these factors, I recommend a strategy that combines RSI and Bollinger Band signals for enhanced precision. We will initiate a long position when the RSI falls below 50 and the price touches the bottom of the Bollinger Bands. Specifically, on January 19, 2026, the forecast price is $602. The RSI is expected to be below 50, and the price is near the bottom of the Bollinger Bands. I suggest entering a long position at $602. Set a stop loss at $593, just below the support level, to protect against a sudden downturn. The initial target price should be $623, aligning with the recent resistance level. If the price reaches $623, we can adjust the stop loss to break even to secure profits and potentially set a second target price at $649, based on the previous high. This strategy balances risk and reward, capitalizing on the expected bullish momentum while mitigating potential losses. Based on the historical data and forecast, Wrapped Beacon ETH has shown a generally upward trend, albeit with some volatility. The price has consistently found support around $3,350, and the forecast suggests a continuation of this upward momentum, with prices hovering around $3,360 to $3,420 in the short term. Considering the RSI values, which have fluctuated between 47.6 and 68.3, we are not currently in an oversold or overbought territory. However, the Bollinger Bands indicate potential trading opportunities. When the price touches the lower Bollinger Band, it signals a potential buying opportunity, while touching the upper band suggests a potential selling opportunity. Therefore, my recommended strategy is a combined approach leveraging the Bollinger Bands and RSI. I suggest a buy position when the price dips to $3,360, coinciding with the lower Bollinger Band. Place a stop-loss order at $3,350, just below the established support level. For the target price, aim for $3,420, aligning with the forecast and the upper Bollinger Band. This strategy aims to capitalize on the anticipated upward trend while mitigating risk through a well-defined stop-loss. If the RSI reaches 80, consider taking profits and re-evaluating the position. This combined strategy provides a balanced approach to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Gnosis exhibits an overall upward trend with recent consolidation. The RSI consistently remains above 50, indicating a bullish momentum, though fluctuating around the midpoint. The Bollinger Bands have been expanding, suggesting increasing volatility and potential for price movement. The forecast data shows a continued upward trajectory, with prices expected to reach $144. Therefore, I recommend a long position strategy with a focus on capitalizing on the upward trend and minimizing risk. I propose entering a long position at $141, coinciding with the start of the forecast period and a slight pullback from the recent high. The stop loss should be placed at $137, just below the recent support level, to limit potential losses. The initial target price is $144, aligning with the forecast high and a reasonable profit target. If the price continues to rise beyond $144, we can consider adjusting the target price to $145, the previous resistance level. This strategy combines trend analysis, RSI signals, and Bollinger Bands dynamics to optimize returns while managing risk effectively. Based on the historical data and forecast, Filecoin shows an overall upward trend, consistently testing and bouncing off the support price of $1.46. The RSI fluctuates between 45 and 64, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility, with the price occasionally touching the upper band. Considering the forecast for the next week, the price is expected to hover around $1.48 to $1.5. Therefore, I recommend a long position strategy with an entry price of $1.48. To manage risk, set a stop loss at $1.46, just below the support level. For the target price, aim for $1.59, the recent resistance level, offering a potential gain of $0.11. To refine this strategy, I'll incorporate the RSI. If the RSI dips below 20, oversold, consider entering a long position at the prevailing price, with a stop loss at the recent low and a target price near the resistance. Conversely, if the RSI exceeds 80, overbought, consider a short position. However, given the current upward trend and forecast, the long strategy appears more favorable. The portfolio will primarily focus on the long strategy with an entry price of $1.48, a stop loss of $1.46, and a target price of $1.59. This approach balances potential gains with risk mitigation, aligning with a high returns investment strategy. Based on the historical data and forecast, Trust Wallet shows a slight upward trend with some volatility. The support price consistently remains at $0.872, and the resistance fluctuates around $0.917. The RSI values are generally within the neutral range, with occasional dips towards the oversold territory. The Bollinger Bands indicate periods of contraction and expansion, suggesting potential breakout opportunities. Considering these factors, I recommend a strategy focused on capitalizing on short-term price swings while managing risk. My proposed strategy is a combination of RSI and Bollinger Band signals. I would initiate a long position when the RSI dips below 30 near the support price of $0.872, indicating an oversold condition. The entry price would be $0.872. A stop-loss order would be placed just below the support level at $0.865 to protect against a potential downward reversal. The target price would be set near the resistance level of $0.917, offering a reasonable profit margin. If the price breaks above the upper Bollinger Band, I would consider taking profits at $0.92. This strategy aims to capture quick gains during periods of increased volatility while minimizing potential losses through strategic stop-loss placement. based on the historical data and forecast, just shows a slight downward trend. The price has been fluctuating within a range between $0.0387 support and $0.044 resistance. The RSI values have been oscillating around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering the forecast for the next week, the price is expected to decline slightly from $0.0416 to $0.0391. Therefore, I recommend a short-term contrarian strategy to capitalize on potential short-term bounces. My proposed strategy is to enter a long position when the RSI reaches the oversold level of 20, which hasn't occurred recently, so we will wait for the opportunity. When the price touches the support level of $0.0387 and RSI is below 40, enter a long position at $0.0387. Set a stop-loss order at $0.0375, just below the lower Bollinger Band. The initial target price is $0.0405, aligning with the center of the Bollinger Bands and a minor resistance level. If the price reaches $0.0405, consider moving the stop-loss to break-even at $0.0387 to secure profits and potentially ride further upward momentum. This strategy aims to profit from short-term price bounces while managing risk with tight stop-loss orders. Based on the historical data and forecast, PAX Gold demonstrates a clear uptrend. The RSI consistently moved above 50, indicating bullish momentum, and peaked at 70.8 on January 12, 2026. The forecast data projects further price increases, reaching $4,740 by January 19, 2026. Combining the RSI and Bollinger Band strategies, I recommend a long position. Entry price will be $4,580 on January 13, 2026, coinciding with the start of the forecast period. The stop-loss will be set at $4,520, just below the recent low and below the bottom of the Bollinger Bands, to protect against potential pullbacks. The initial target price will be $4,670, aligning with the forecast price on January 16, 2026. To maximize potential returns, I will implement a trailing stop-loss strategy. Once the price reaches $4,670, the stop-loss will be adjusted to $4,610. If the price continues to rise, the stop-loss will be trailed accordingly, ensuring that profits are locked in while allowing for further gains. A secondary target price of $4,740 will be set, corresponding to the forecast high on January 19, 2026. This combined RSI, Bollinger Bands, and trailing stop-loss approach offers a robust strategy for capitalizing on the projected uptrend in PAX Gold, balancing risk and reward effectively. Based on the historical data and forecast, Pump.fun shows a mixed trend with periods of upward and downward movement. The RSI consistently fluctuates, dipping below the oversold level of 20 only briefly. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band, suggesting potential oversold conditions. Considering the recent price action and the forecast, a cautious bullish strategy is warranted. I recommend a long position entry at $0.0024, coinciding with the forecast price on January 16, 2026. A stop-loss should be placed at $0.0022 to limit potential losses if the price reverses. The initial target price should be $0.0026, aiming to capitalize on the predicted upward movement. To refine this strategy, I will incorporate the Bollinger Bands for price prediction. If the price touches the lower band, it signals a potential buying opportunity. However, given the current RSI levels and the forecast, a conservative approach is best. Therefore, I will maintain the long position with the entry price of $0.0024, a stop-loss at $0.0022, and a target price of $0.0026. This portfolio combines the RSI and Bollinger Band signals to maximize potential returns while managing risk effectively. The strategy is designed to adapt to the market's dynamic behavior and provide consistent profitability. Based on the historical data and forecast, World Liberty Financial shows a generally upward trend with increasing momentum. The The RSI consistently stays above 50, indicating bullish sentiment, with peaks above 70 suggesting overbought conditions. The forecast for the next week projects continued upward movement, with prices reaching $0.178. Considering these factors, I recommend a long position strategy. Specifically, we will enter a long position at $0.172, capitalizing on the projected upward movement. To mitigate risk, we'll set a stop loss at $0.168, just below the recent support level. Our target price will be $0.18, providing a reasonable profit margin while accounting for potential volatility. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the bottom band, indicating a potential oversold condition, we'll consider a buy signal. Conversely, when the price touches the top band, we'll consider a sell signal. Combining the RSI and Bollinger Bands, the entry price of $0.172 aligns with the forecast and provides a favorable risk-reward ratio. The stop loss at $0.168 protects against unexpected downturns, while the target price of $0.18 offers a substantial return. This combined strategy leverages both momentum and volatility indicators for optimal results. Based on the historical data and forecast, Chiliz demonstrates an overall upward trend, supported by consistently breaching the resistance level of $0.0507 and the forecast indicating further price increases. The RSI fluctuates between 64.3 and 76.1, generally above 50, suggesting bullish momentum. The Bollinger Bands show that the price is approaching the upper band, indicating a potential for a short-term pullback. Considering this, I recommend a long position strategy with an entry price of $0.0501. A stop loss should be placed slightly below the support level at $0.0456, setting it at $0.045 to mitigate potential losses. The target price will be set at $0.0563, aligning with the forecast for January 19, 2026. To refine this strategy, I will incorporate RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we will enter a long position at the prevailing price. Conversely, if the RSI exceeds 70, suggesting an overbought state, we will consider exiting the position or taking profits. Furthermore, if the price touches the lower Bollinger Band, it signals a potential buying opportunity, while a touch of the upper band suggests a possible selling point. Combining these signals with the overall trend, the portfolio will prioritize the long position with an entry price of $0.0501, a stop loss at $0.045, and a target price of $0.0563, regularly adjusting based on RSI and Bollinger Band indicators. Based on the historical data and forecast, Dash shows a downtrend. The RSI consistently remains below 50, indicating bearish momentum. The forecast for the next week projects continued downward pressure, with prices fluctuating around $37 to $38. Considering the support price of $37.3 and the recent price action, I recommend a short position. Enter a short position at $38.8. Set a stop loss at $39.3, just above the recent high. A reasonable target price would be $37.3, aligning with the established support level. This strategy aims to capitalize on the anticipated downward trend and limit potential losses with a well-defined stop loss. To refine the strategy, I will incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential reversal. However, given the overall bearish sentiment, I will prioritize the RSI and support levels. If the price falls below $37.3, I will close the position to secure profits or minimize losses. This combined approach, leveraging both RSI and Bollinger Bands, offers a balanced strategy to navigate the current market conditions and achieve high returns. Based on the historical data and forecast, Zcash has experienced a significant downtrend, particularly from January 10, 2026, with a sharp decline to $375. The RSI consistently indicates oversold conditions, with values dropping below 40, suggesting a potential rebound. However, the forecast for the upcoming week predicts continued downward pressure, with prices hovering around $400 to $438. Considering the support price of $375 and the forecast, a contrarian strategy focusing on short-term gains during potential rebounds is advisable. I recommend a long position at $402, placing a stop loss at $375 to limit potential losses if the downtrend continues. The target price for this trade should be $410, aiming to capitalize on a short-term bounce. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests increased volatility and potential for a bounce. Given the RSI nearing oversold levels and the forecast showing a slight upward trend in the initial days, a long position at $407 with a stop loss at $381 seems prudent. The target price should be $421, aligning with the previous resistance level and providing a reasonable profit margin. This combined approach, leveraging both RSI and Bollinger Bands, aims to capture short-term gains while managing risk effectively.